Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update today about the economy and the investment market so you can understand what we see in the global landscape. You know, we had a small sell-off, 3% or so in that range over the last week. And one of the things that I want to always educate investors on is simple. Regardless what asset category you're invested in, whether it's the bond market, the real estate market, gold, the equity-based market, stock market, or whatever asset category, 2 to 5% movements are pretty commonplace throughout any calendar year. And this one, to me, is basically one of those pauses that refreshes, as we call it. And as simply as this: no asset category goes straight up every step, every single day. In fact, it's healthy for all investment sectors to actually have slight corrections. What's a correction? Typically, for me, we look at about a 10% correction as pretty normal. That happens often, at least one time a year in most asset categories. 2 to 5% movements often happen at least a dozen times throughout the year. And 1% up and down movements usually happen between 40 and 50 times every single calendar year. Again, not just the equity markets, but if you remember last year in the bond market, we saw long-term treasuries actually sell off around 15% negative for the whole year of 2013. Now, of course, we didn't own any treasuries throughout 2013 because they were relatively weak. Now, again, stair-step pattern up, stair-step pattern down. What I basically mean is this: it's healthy for any sector to go up 4 or 5 steps, come down 1 or 2, go up 4 or 5 steps, come up 1 or 2. At the end of the day, what you essentially see, especially if we look at the bond market hit about a 3-year on the 10-year treasury, 3% yield on the 10-year treasury just about 3-4 weeks ago. It's actually corrected back down to about 2.75. Ultimately, if the economies around the world continue to be strong and slowly get stronger, which, by the way, that trend is getting positive, and I firmly believe as we continue through 2014, we're going to continue to see positive developments in the world economies. Now, there's been a lot of finger pointing why the market sold off. Some said it was emerging market currency in Argentina. I can firmly tell you that Argentina basically has almost zero GDP growth that is reflective on most of the world economies. But as we always talk about throwing out the baby with the bathwater, emerging markets, generally speaking, sold off about the most overall, especially country-specific sectors. Now, we do own a position in emerging markets, which we did have a technical sell last week. What that means to our clients is this: we're going to start trimming positions in that and could actually eliminate that position. We'll do so throughout this week to kind of see if we get any bounce back, as we call it. But again, we want to own relatively stronger sectors, and we do run a strict discipline for risk management. And again, we will be looking to trim positions in that emerging market exposure throughout this week. We run a strict strategy, and risk management, in my opinion, is the most important part of any investment strategy. One of the other things I want to talk about that is starting to develop, of course, is really the earnings sales trend for the U.S. economy. And we'll talk primarily about the large cap marketplace. About 75% of companies that have already announced earnings for fourth quarter of 2013, about 75 have either beat or met expectations. This is actually very good. So what, again, this tells you is that things are slowly getting better. The consumer's somewhat on track, and they're getting better. Corporate profits are very good. But again, remember, nothing goes straight up and nothing goes straight down. Healthy 2 to 5% downward drafts or corrections, as we call them, are very commonplace throughout any calendar year. And certainly I would expect a 10% correction easily sometime in this year. There's no guarantee that will happen, but I can tell you, statistically speaking, we get almost 10% correction in almost all market sectors approximately once every 12 months. We haven't really had one in the last 12 months, so I would expect one this year. Make sure you understand that and make sure that you can handle that short-term volatility, because it's that volatility ultimately that helps you have the opportunity to make a good return on your money. This is Brian Resney. Of course, we'll have a live radio and TV show this week. If you're a client and you have questions about your portfolio, please give our office a call. If you're not a client and you want to benefit from our professional money management, please call our office for a consultation. We always like taking on new clients to do business with. And of course, if you're a client and you have referrals, our business grows greatly from your business and your referrals. So think about us next time you talk to a friend or a business acquaintance. Again, referrals really help drive and grow our business. Have a safe and profitable week.